Okay, good evening to everyone here. I'm sorry for the delay. I had the issues with network on my end here. Sorry for the delay. Um, Welcome to yet another live class. It's indeed a great a pleasure to have you all here. Thank you for coming. Thank you for your time. Thank you for your patience. I really appreciate. So, as you all know, my name is Isaac Jonathan, popularly known as um, Crypted Joe. So before we get into why we are here today, you can just introduce yourself if you are active and you are live. Hello, if you are active here, you can just introduce yourself, tell us your name and where you are watching the live class from. Hello, good evening. Okay, you are welcome, Mr. Richard. You are welcome, Mr. Andrew. You are welcome, Mr. Kalu. You are here. You are welcome, Mr. Abdulaziz. Prince P, I see you there. Grace TV, Inusa Damudaya. Okay, okay. You're all welcome. You're all welcome. It's indeed a pleasure to have you here. I hope you all can hear me. You can all hear me audibly, right? Welcome, Mr. David, Mr. Japheth. You're all welcome. Thank you very much for your patience and for attending the live class. So please, if you can hear me loud and clear, you can just indicate so I will know before we get on to why we are here. If you can hear me, just type in the comment section that yes, you can hear me. If I'm audible enough, you can just type in the comment section. Okay, okay. So once again, good evening to you, ladies and gentlemen. I believe we have some ladies in our midst. So good evening to you all. All right, welcome to yet another live class with Scripted Joe. It's indeed a pleasure to have you here, and I count it as a privilege, a great privilege to be in your midst, to be amongst you guys rather. So, in the previous live class, we talked about how to use Bybit, how to take long and short trades, and all those, how to take signals, like if you are being given a signal or you did the analysis yourself, how to place the signal on Bybit and leverage and all that. So, I'll still touch most of those things we discussed in the previous uh, class, while in my subsequent explanations and um, the descriptions, I'll be dealing, like, I'll be touching some of those concepts we discussed about the previous class. So, for today's live class, we are going to be delving into the support and resistance, like key basic um, the basics of support and resistance rather. So we'll be going to how to um, draw a valid support and resistance, key levels, so you can know how to draw them and know where to draw them from and know how to take trades and all that. So, now not wasting much Without wasting much time, I'll just open my. Okay, I want to share my screen now. Let me share my screen. Let me share my screen. Share screen. Chrome tab. Window entire screen. Okay, share system control. No, entire screen. Wait, so share. Entire screen. Um, okay, I've started sharing my screen now. So can you all see my screen? I want to go over to trading view so we can start learning about the basics of the support and resistance. So I don't know if you all can see my screen now because I've started sharing my screen already. Can you all see my screen? I've started sharing my screen already. Okay. What about now? Okay, okay. I'm coming. How about now? Can you all see my screen? Can you all see my screen now? Can anyone of you see my screen? Still, what's going on? Why is it not coming up now? Okay, hold on, please. I'm coming. Please, able to see the content of the screen. Entire screen. Window. Entire screen. Window. Also share system window. Oh, contact. I think this will do. Window. And share. Is it now showing in your own end? I've started sharing the screen now. Can you all see? Can you all see my screen now? How about now? Okay, okay. Very good. I think the issue was network. Okay, okay, no problem. So we'll be heading over to trading view now. So just search. Okay, before we get started, I think let me just say one or two about support and resistance. Support and resistance just basically key levels, like key levels that the market would like to will always react from most of the time. It usually reacts from. What do you take on trade? I just opened a pair on TradingView. I have not started anything yet. So support and resistance just basically key levels that you mark on your TradingView or on your chart to before to give you that confidence to take action either to long or short a coin. So that key level now is where price will kind of react from. Excuse me. Like when you mark those key levels, those key zones now, it kind of based on the concept of support and resistance, you have that uh, full knowledge or that confidence or that confidence that okay, from this key level now, once price comes to this particular level, there will be a reversal or market will react from this zone, and from this zone. So that just basically um, support and resistance, and basically almost um, almost every one of us, we are all using support and resistance. If you check very well, we are all using support and resistance. Even if your strategy is another one, just in the overall view, like on a larger scope, we are all using um, support and resistance. So one thing again, support and resistance is just basically key levels that the market to tend to react from. So let's get into this one. Does not have, okay, let me just say one or two on this chart. So on this particular example now, let me go to the other side. This one is not giving us much information. Okay, yes. Okay, so now marking your key levels using the support and resistance strategy is before you do so, you look at the chart. The nearest key level close to the current price is where you mark your resistance or your support from. And before you do so, you check very well if you check for the first criteria to mark before you mark out your support and resistance line or mark out the key zones or key levels is to see two and above rejections. And when I mean rejection is on that particular key level or key zone. Once market comes to that place, it always reject price and move downwards or upwards. Once you see two to three rejections, that should tell you that that zone is a very strong zone, or like it's a valid one. So two to three rejection before you can say okay. Sometimes it might be one, but like high probability key levels, it should be at least two to three um, rejections on those key levels. So, for example, now, okay, before we continue, are we following? Like from the definition to the explanation, are we really catching up? Or like, are we following? If you don't understand, you can go over it before we start marking things on the chart. Hello, are we still together? Are we following? Okay, okay. So, like on this example now, you can see. Okay, let me now in using the support and resistance strategy. The first one, like using the support and resistance strategy, the first one that's the basic one, is marking key levels based on the current movement, close to the current price that you make that you take your trades from. They have support floor, or support and resistance, and they have support turns to resistance, and they have resistance turns to support. So if you know these three, and you know how to mark your valid support and resistance, the zones, if you know how to mark out the zones to be like a valid ones, then it can be like a long you can take a long trade, and after some few hours then you'll be shorting that coin again. Because if you are very sharp and you know what you are doing, and maybe for example you long from a support, and that support now it now turns to a resistance, then you will now take a short after waiting for some confirmation, because you don't just short or long the coin after seeing a support or um resistance zone. You wait for confirmation and some other things. Yes, some few confirmation you take your before you take your long or short trade. So on this example now, you can see from this particular area here, you can see a support here, because as at that time that price was around this zone, this is the nearest um, resistance area. Now you don't want to mark it like when price was at this level now. This price was at this level, doing this little ups and down. You would not like to mark your resistance from this one because it's too far from the current price. So you just want to look out for the key levels that are close to excuse me. You want to mark out key levels that are very close to the current price. Now, for example, let's say this current price now is still at this place now, or like somewhere here. This is now like a resistance, because resistance simply means stopping something from happening or from taking action. So this particular key level here is their resistance zone that kept pushing price downwards. Even if price want to break above it, it keeps like pressing it downwards to the downside. And you have some example like support floor here, as you can see here. So from this zone, particular zone here, this is not your support. This is not okay. Let me even write something like a text. This is not your support. from this particular place, we had a push. When price came down here, when it came to our support, it got a valid support, like the name implies support. So it's like supporting it, giving it that push to the upside. It, it came to that resistance. If you look very well, it came to that resistance area, tapped into it, and then started coming down. It came down to the support again and pushed it to the upside. Got into the resistance, and price was being rejected, stopping it from going higher. It came down to the support floor. Now you can see from this particular example now, we had two to three um rejection, but on the third one, the support level wasn't strong enough to hold and push the market to the upside or to the resistance zone. So now in this example now, or in this scenario, what you're looking at now, from this particular area now, you can see that this support now has now turned to a resistance, because when you see that a support or resistance is being broken by displacement, like not with wicks, but wicks simply mean rejected price. But this now you can see that it's a candle body close. Once the candle closes with the body on the support or on the resistance, that simplifies um, support turning to resistance or resistance turning to support. So in this scenario, you can see that our support now is now resistance, because it's no longer strong enough to push price from this level to the upside. So now it's now the support now is now resistance. So if you mark this particular zone here now, let me mark it this way. You can see the support that pushed the market from here to this place came down, pushed it for this place, came down. Now from here it's supposed to go to this particular area or continue higher. And even if it continue higher, then your resistance will not turn to support. But it came down, broke the support with the candle body closing below the support. Now changing the support to resistance. Now this is your support now. This is now your new resistance area. This is now your new support. Why? Because once for example, if your support level is being broken by candles closing below it, it's now automatically a resistance, because once a little retracement happens and then it comes back to that area, price will be rejected, like it will start coming down, because this is now a new resistance area and this is now your new support. Once now, if you want to take a long trade or a short trade now, you look closely which of the two zones, the current price now, which of the two zones is it closer to? Is it the up one or the down one? Like in this scenario now, if I want to take trade now, I will I will take a short first, because I believe the market will come back and retest it the third time before coming down. Or in some scenario, no market will like to do something. If you can be active enough and check, and once you come to your support floor, then you take a long and you try to take profit at the resistance. So that's just the basics of uh, support and resistance. So I don't know if we are all following. Sorry, excuse me. I don't know if we are all following. I'll get to the confirmation aspect. So for now, we're just trying to open up. Like we're just doing warming up into the basics of support and resistance. So I don't know if we are all following. Like when I was explaining about the support and resistance, support turning resistance, resistance turning support, and how to mark it correctly, and For you to know that it's a valid and strong support or resistance, you must see at least two to three rejections, price being rejected two to three and two and above times. So are we following? Like, does anybody understand? If you don't understand, we can go over it before moving on to more examples and more explanations. Anyone? Are we all following? So we can move on to the next part, to further explanations rather. Hello, hello. Are we still all following? Are we active? Are we catching any of all all what has been said so far? Hello, Browina. Welcome, Mr. Ekene Gabriel. Welcome from Anambra State. You're welcome to the live class. You're welcome to live. Okay. Um. Okay. I will soon get to the confirmation aspect. For now, I just trying. All right. Yeah, okay. You're following. All right. That's good to hear. I will get to. Okay. I will get to the confirmation aspect. I just need to make like two to three examples with what I've said so far. Okay, you're active. That's good to hear. So I'll just do two to three um, samples with what I've said before we move on to the confirmation aspect. So let's get into it since we are all active and following. I love that. So now, okay, let me say one or two again. So now your support is now resistance. This is now your resistance. Yeah. Just forget about this one at the top there. Then focus on these two now. This and this. Now support is now your resistance. It broke below the support, turning into a resistance. Now it came up there. Price got rejected. Came down. It also came there like want to like push above, and it started coming down. Now, sorry, I'm feeling under the weather, so that's why I'm kind of having this late night cough. So if I want to take this trade now, this is a boom USDT. It's a crypto pair. So if I want to take this trade now, I'll kind of it's a long because I feel that market is kind of coming downwards to the support level. So if it gets to the support area first before going to the resistance zone, now I'll take a long from here. You put your stop loss below the zone. You give it a little room, a little space that market will need. And sometimes market will just come down a bit before going to your direction. So then you put your now you put your the main idea of support and resistance. Once you draw your valid support and resistance, either support and resistance or resistance on support or support on resistance, once you mark it out correctly, now your entry should be on a particular key level and your take profit should be on the nearest key level, either above or below. So in this example now, our our nearest key level is this resistance, is this our resistance zone that was previously a support floor. See it properly now, what's wrong with it? So now if I want to take this trade, this is how it would look like. This is how it look like. My sorry. So this is it. This is it. So um technically, once the price of this coin comes to our support level, which is our key level below the current price now, there's a high tendency, like there's a high chance that it will push the price upwards to the nearest key level. And once it comes to this our resistance zone, we can boldly or confidently take a shot from there, because we can see multiple rejections after breaking below it, turning it from support to resistance. You can see that this is the first rejection, this is the second rejection. So now this is the number one criteria for you to mark out your your support or resistance. You should see at least two, not less than two rejections, and we have seen two here. This is the first one with a wick, and the main nature of a wick is rejection. Once you see a wick, it means rejected price. Price want to push above price, the price got rejected, and showing a wick, that means rejected price. This also, then this is resistance. Now you can take a short. If the current price now is to be around here, then you can take a short to support, then from support you take a long to resistance. You can do that continuously until either of the two gets tired of pushing price to the upside or to the downside. Like in this scenario now, once you long from here, you take profit here, you short it again, you come here, you long it again, and maybe the price now breaks above, just like you are seeing here, not with the wick, but with the body of a candle, like we call it displacement. Once you see something like a candle close below or above, for example now this candle body close below this support and now turn to resistance. Once you see something like that here, candles close above this resistance, then you will now use this um, uh, resistance as your new support to push price of the coin to the nearest key level. So that's just it. It's all about key levels, valid zones, and yes, key levels and valid zones, and how you draw them appropriately. Now, for the confirmation, you can use the weeks. You can use weeks, or because sometimes you might see some weeks trying to go above this resistance or the support, and sometimes you might see one to two body candle close like 50% of the your rectangle to whatever tool you are drawing your support and resistance with. But as long as it doesn't close above this your resistance tool, like this your resistance tool that you use to mark out your this tool used to mark out your resistance. Once you don't see any candle closing above it, once you see a candle or series of candles close above it, then it has now turned from resistance to a support. Then you take a long confidently from here to the upside. As you can see in this scenario, price was being pushed from here to here with some little wicks showing rejected price. Price wanted to go below but got rejected from this support because the support was kind of strong and valid as at the time of use here. So from here it went up to this place, it came down, you take a from here you long, take profit here, You can short from here to this place again, take profit here, long, take excuse me, take profit here, then from here again you short, you can take profit here or you still hold, then take profit here. But you can see it came back to the resistance. Now if you are a kind of break even trader that breaks even when the trade goes a bit far away from your, like 50% or 30% from your entry, and you do break even, you'll be kicked out with no loss and no profit, but it went the original direction you want it to go. So that's just it about support and resistance. Like for in this scenario now, if you want to, in this example now, you can take a shot from here, something like this. You can put it exactly on the line of your rectangle tool, whatever tool you are drawing, or you put it somewhere around that place. Just put it, your key level is like your Moses, like you are following your key levels. So your entry now should be on your key levels. So you put it, you can set it here, you can set it here, but it should be around your key level, not too far from your key levels. So let's say you take a shot from here. You saw that the price was coming to the from here, the price was coming to the resistance. You can now boldly take a shot. This is, you put your stop loss not too close to the resistance, but at least a bit above. So now you can see, if you were like active and sharp enough to take a shot from this resistance to this support floor that was later broken to turn to a resistance. If you took the trade, then it will give you a 1:3 risk reward ratio. That means whatever amount you are risking on the trade, you will be making times 3 at take profit. If you took the short position, you will make times 3, because this is a 1:3, 3.04 or 3 point whatever, or 4 point whatever, or 6 point whatever. The first digit is your standard digit based on risk reward ratio. This is 3.04. Automatically this is 3:1 or 1:3. If I'm to risk like $5 on this short trade, I will be making 15 back, because 5 times 3 give me 15 and take profit. So these are just the basics of support and resistance. So are we still together? Okay, Mr. Abdulwahid, you said, how do I get long position diagram? Is very simple. You just come over to, this is it. On a mobile phone, you look below your trading view, you see something like a pencil icon. You tap on it. Once you tap on it, then you see all the tools available. You can add some to favorite that you can have access to easily without you scrolling downwards to find um to look for them, to add them to favorite. Like on the laptop, I already have this on my favorites. Even my time frame, yeah, like I set it from 1 minute to the 1 month, based on some kind of research and some analysis. So on the mobile phone, you look down, you see a pencil icon, you click on it, then you look for, you will see short position, you will see long position. So once you click on, let me redo this again. Let me do this again. So on the pencil icon, if you click the pencil icon and you click on short position, like for example now, you can see it short position. So once you tap it, it has been highlighted for you. Rather, it has been highlighted for you. So now the first place you have to drop it now is on the entry zone that I want to take the trade from. For example, we have to take the want to take a short position now. I want to take a shot, so I'll place it on the key level. I'll place it here. I'll tap it to release. Then you can adjust it to make it thinner or fatter. So I'll just set it like this. Then you reduce your leverage by tapping on this square, white square. You reduce it, you increase it, but on the more standard risk management, put it a bit above your resistance or your support. So that's just it. Put this one here. So that's how to get the long or short position too. You click on the pencil icon if you are using a phone, and on a laptop, it will be on your screen. It will be on your screen on top. I like putting mine below. So did anyone of us understand what I explained? Excuse me. The support on resistance, the resistance on support, and other things that I spoke about. Did any of us following? Yes, bro, winner. Long is buy and short is a yes. They're just terminologies in the trading space. Once you hear long this, it means buy. And long buy, they are saying price will go up, a particular place will go up. Then short or sell is the same thing. Most times, we crypto traders we like using buy and sorry, we normally used to use the long and short, long to take a trade. Like once you want to long a trade, you want the price to go upwards, and when you want to short a trade, like short a coin, you want the price to come below the current price. So it's mostly we are fond of it, saying long and short. Is the like is the forex traders that do use buy and sell mostly. They are fond of saying buy, sell gold, sell GBP, JPY, sell this, buy gold, buy that. But we the crypto trader, we are fond of saying long and short. So that's all. Okay, Mr. Richard said, can you take profit at any time without getting to the key support where you place the take profit? Yes, you can. So sometimes the price might be like market might be crazy that day, like want to do its own thing. If you are happy, most times crypto pastor will say take profit when you are happy. Yes, that's because the amount we set for ourselves, like our daily target, we do set for each and every one of us. It differs. It's kind of differs amongst us, so it's different. I might have a $10 profit, like a $10 target per day. You might have like $50. Someone else might have $500 target per day. So even if it doesn't get to, like, for somebody like me now that have, for example, I might have a $10 target per day, and the trade is still going fine, and it hasn't gotten to our take profit yet. Once I see that, okay, I have the $10 now as my unrealized profit, because you it's not yet profit unless you take profit. So that's just because that's why all most exchanges, 90% of exchanges, we call it unrealized profit, because it's not in your custody fully yet. Anything can happen, so it's unrealized. Yeah. So if that trade is going well and I can see that I've made like up to $10 in my unrealized profit, I can close, because it will help balance my psychology as a crypto trader. So if I say that, or if I don't close, the second option I will do is that I will set my stop loss, like I'll set my stop loss at $8 in case you want to reverse. Then if it goes higher to like 11, 12, $13, maybe the take profits are like I'm to make $20 from that trade, and I'm still at 10, getting to $11. What I'll do is I'll set my SL, I'll move my stop loss to break even. I'll still talk about that in subsequent um, explanations. So I'll move my stop loss to my entry. Then, sorry, I'll move my stop loss to profit like $8. Since I'm still like $10 to $11 away, I'll set my stop loss to $8 profit. Then if it moves to 11, 12 and still going gaining momentum upwards, then I'll move that stop loss now to $10, which is my daily target. Then I can have peace of mind and I'll allow the trade to be running down. If I see that it goes higher, higher and gain momentum to the upside, like 15, 16, I'll move it to like 12, $13 up till it gets to take profit. Or if it reverses and kicks me out on the $10 or on the $8, fine. Everywhere is still good. At least I didn't lose or I didn't get kicked out at break even. Because break even, you will not lose any money, you will not make any money. So that's just it. You can take profit at any time as long as your greed allows you, because that's one thing that kills us traders, greed. Okay, in last webinar, say something about liquidity and stop loss. I will because I'll make some examples and I'll show I'll show us how to take that trade based on that example. So I'll once I will like when I get to the stage of showing the example, I will mention that leverage, liquidation, stop loss, and all that based on risk management. Okay, okay. Let me go over it again. Let me go over it again. Now, if you look closely, let me zoom this for you, make it smaller. If you look closely now, you can see from this level, price started coming down, like from this particular, the beginning of our resistance. From here, the price came down and there was a rejection. We got a push to the upside. Price got rejected. It came down. It got rejected again. Got a push. Came to the upside. Did some little battling with the price. Like it was kind of a battle between buyers and sellers, and the price was like kind of trying to push above to break above our resistance. But based on the strength of the resistance, it still got resisted. Even if it came up a bit again, it still got resisted and pushed to the downside. Now, from this place, we are to see something like this again. Price going up to the upside, like it did there multiple times, two times. We're like expecting the third time for it to push price to the upside. Now, this is where your stop loss will help you because, excuse me, I'll kind of hear some people saying that they don't trade without, they do take trades without stop loss. Now, even if you have confidence in your strategy and you believe in your setups and everything is fine, market will still do its own thing. Now, from this particular place now, we are supposed to see rejections like we saw here with the wicks, little wicks here, much bigger wicks here. We are supposed to see wicks from this particular zone here to get a push to the upside to this maybe take profit here at the resistance. Now, instead of that, we saw the opposite. There was a displacement, like our support got turned to resistance. Why? Because it broke below it with candles closing. It could be a candle, two candle, three candle, or four candles. So basically, once you see a candle like just one candle breaks below it and close with the body of a candle, not with the wick. Oh. If it's still the wick, that means the support is still strong enough to push the price. But in this scenario, you can see that it's being broken with bodies of two to three to four candles. Now, that's when you know that your support level or your buy zone or your support key zone or key level is no longer strong enough to push price from this zone to the upside. Now, What you do is kind of you have identified that okay, this now is now an example of support turning to a resistance, because if a candles or series of candle breaks below a particular zone, the nature of that key level has now turned to the other one. Like for example, this was our support key level before, but we got a displacement. We got candles close below it. Now it's no longer a support, but now a resistance. That means uh, support now resistance, because we have now closed below the support, making it weaker. Like it's now weak. It's no longer strong enough to push price from this particular zone to this upside. Now it's now resistance. And how do you know it's resistance? Because once it closes below it, it's now a key level. It's now a key level, but no longer a support level, but a resistance level. Now you can see from this particular place, price broke below our support, turning to a resistance. Now from here, price came down. From this place, price came. What's happening? From this particular place, price came down to this particular support floor, went up, price got rejected with with a wick. It came down a bit, but not with full strength to the downside. It came back up, still tried its best to close below or close above the resistance, but because of the resistance key level is still a strong and valid one, we got a push away. Now we're coming to the support floor to have a retest. That's why sometimes you hear your mentor or someone or a co-trader telling you that wait for a retest, don't buy or sell anyhow, wait for a retest. What they are trying to tell you is that take your long or short from a key level, a valid key level. Now, for example, I might just come into my trading view, open my trading view, I'll just say that okay, this is coming down from now, resistance, this is coming down. Okay, let me take a short from here. The trade might just reverse and clear your stop loss, tap into this resistance zone and start coming down. What you do is, since this is still at the middle range of your support and resistance, what you do is just to wait. If it comes below here, then you know that okay, it's time for you to long. And if it goes up, then you know that it's time for you to short. Set your stop loss at a reasonable amount that you can stomach. If the resistance doesn't hold, it will hit your stop loss. Then you know that okay, since you now check if you get a displacement like candles closed above your resistance, then you take a long from here to the next key level. But if it doesn't, like got rejected with the wicks of a candle, or even if a candle body close around the zone but does not close above, then um you set your short from here, take profit here. Or if it comes here, you set your long position to, then you take profit. Like for example, if you take a short, let's say price comes here and you want to take a short, you just set your entry here. You adjust it there. Sorry, you put your take profit here, then you adjust your leverage. Sorry, you adjust your stop loss, then you are good to go. Now you are buying at key levels. You are not just buying anyhow. You are buying or selling at key level. That means you are waiting for a retest. Now we are waiting for this to come here to long it to our resistance, then short it back to our support. As long as this will take us. You're not just buying at, like for example, you just come now, you just want to long it here or no. You don't control the market. Rather, you follow what the market is doing based on the knowledge of your strategy, your risk management, and some other conferences. So that's just it about the basis of support and resistance. So please, any other question based on what I've said so far? Do we understand my re-explanation? Because we still have to make example. I think we still have to like make examples of how to take those trades on your exchanges. But personally, someone like me, I do make use of Bybit. Yes, because that's the one I started with. It's kind of it has this uh, friendly interface, simple interface, and all simple features to be using as a beginner trader, and it doesn't have any hard thing there to it. Everything is just self-explanatory there. So for have a Bybit account, you can sign up using the links in the group. You can sign up using the link in the it doesn't take long to have a Bybit account. You just need to verify whether your BVN or NIN. So you sign up, have a Bybit account. So 100% with what we are doing here, because most of my explanations and most of my um, teachings and examples will be on Bybit. So if you don't have a Bybit account, you can um, create a Bybit account using the link in the group. The link has been sent in the group, so you can just then start following up. Even if you are using a demo, no problems. Just have an account, follow up with us whenever we have any live class like this, so that you can be grabbing um, more knowledge on a larger scope. So, with that being said, um, do we understand the, my re-explanation on the support and resistance, support and resistance, resistance and support, and whatever? Because we want to move on to the next part now, where we take how to take trades, risk management, some of the basic features on Bybit, and how to take the trade either to long or short. I want to move over to the next one also. If you can, if you are still active and following, you signify. So we'll move on to that part. Hello, are we still here? If you're active and following, you can just signify. Drop you can signify in the comment section, so we can take our next step. Hello, who is active? Okay, so we are good and fine to go over to go on to the next next section of how to take trade now, right? Okay. Good and fine. So I'll log into I'll move over to the next tab now. Open my open my Bybit. Ah, uh, 462. Sorry for the delay. I just need to. I thought I've logged into my Bybit already. Problem. Something that I've logged in before. I still asking for authentication code. Maybe Juju be this. Okay, so now we are moving over to the next section now on how to take. Um, okay, let's say we want to take the long first. Let's cancel this. Let's cancel this one. So we want to take a long first. Let me start. There's this stop loss. So somewhere here. Okay, very good. So we want to take, for example, now we're waiting for price to come to our support. Then we will long it now from this support to um, our resistance. Or okay, let's say want to take a short now. Let's say I want to take a short. Go to your short position to be fixing on the key level, because you know that once price comes to that place, it will get rejected and start moving to the downside. Then take profit at the next nearest key level. Then stop loss above, uh, a bit above the key level. So now, excuse me, we now have we are now getting ready bit by bit to take this trade now. This boom USDT, I think it's a meme coin under the Solana blockchain, I guess, if I'm not mistaken. So we now have our trade ready to be taken. We have our entry here 0.001065, stop loss 0.001115, then take profit 0.00094904 as our take profit, because once the price comes to this place, we have that boldness and confidence that it will get rejected and come to have a retest at this support. Then we can have that clarity to take a long back to the next level, which is our resistance. So on this scenario now, we have our entries, stop loss, and take profit. Now, for us to take this trade now, we are working with our entry, stop loss, take profit. Now, these three things on the right hand side there is what we will place on our Bybit together with adjusting the leverage, confirming liquidation price and stop loss price, and some other things. Now, aside these three things, the fourth thing we have to work with is this stop loss percentage in red. If you look closely, you see a digit, you see some digits in bracket 4.6. All right. So before you place these three things on your Bybit, first of all, you are working with the stop loss percentage, which is 4.69 in brackets. Or if you can't see it, because I believe some of you might have a challenge of maybe the screen is blur or something. If you can see it, fine. If you cannot see it, once you are done analyzing, like for example, you are finished analyzing the coin, you mark your resistance, you mark your support, and then you put your entry at the resistance. Once you are done arranging your stop loss at the very good place, you adjust your stop loss at least a bit above, stop loss, take profit at the nearest key level. Once you are done, there usually used to be some digits in bracket and a percentage beside it. So you look out for that. Now you're working with the digit in bracket. On this particular example, we have 4.69 as our stop loss percentage. Now it is this stop loss percentage now that we are going to divide whatever we want to risk on this trade uh, by it. For example, for this particular example now, I'm going to be risking 5% of my capital. So I deposited some USDT in my Bybit. So we'll go over to Bybit and then I will I will well, we'll calculate the 3% of the capital, then we'll calculate the stop loss percentage. Now the 5%, sorry, the 5% of your capital is what you should know, just like your name. It's not something you must calculate every day. Just like you know your name, when someone asks what's your name, it's the same way you should know the 5% of your capital. Someone that have your $100 account, you should know it at the back of your mind that on every trade you should be risking $5. Someone that have a $50 account, your 5% is $2.5. That means on every trade you are to risk $2.5 per trade. So 5% of the capital is something you should know at the back of your mind. It's not something you'll be calculating every day. Just like your name, you should always know it. So what you have to calculate after doing analysis before taking trade is the stop loss percentage from your trading view. That's what you are calculating every day, because the digits are not the same. Just that the 5% of your capital is constant. 5% is constant for a proper risk management and a balanced psychology. 5% of your capital, but this stop loss percentage is not constant. Sometimes you might have 1 point, 2 points, 7 points, 8 points, 5 points, something percentage. So that's why you need to be calculating it every day. So on this particular example, we have 4.69 percentage. So before we go over to Bybit, we'll go over to our calculator to calculate how much we want to risk on the trade divided by this 4.69 percentage. So are we still together? Can we um can we move on to the next part where we'll be using we'll be calculating how much we want to risk to get our order value and position size, and we'll move over to Bybit to fixing the signal, then wait for it to um for example, we want to get to our resistance level, then we take a short, we short it from there to our take profit, which is our support level. Okay, okay, okay. So we are active and following, right? I can move over to the next part now of calculating losses and taking the signal on Bybit before calling it a day. Okay, 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 okay. All right, all right. Excuse me. So now this 4.69 percentage now is our stop loss percentage on this particular trade. So for example now someone like me now that have a $60 account now, the 5% of it is 3. That means on every trade I should 5% of 60 is 3. That means on every trade I should not be risking more than 3. I can risk below but not more than 3, because once I do that, I'm going up against my risk management. So on every trade, I should be risking only $3 per trade. And how do I get that and make sure it is so on Bybit? This is what you will do. You head over to your calculator. Now, I usually used to have challenge with this calculator. I don't know why they didn't do it as a mobile phone. So we're going to do a little practical now. So I will need someone to like any volunteer at all to do. I want, for example, let me use myself an example now. I have a $60 account. I want to risk $3 on that trade. So what you do is you divide whatever you divide your risk amount, which is your the amount you want to risk lose at stop loss. It's your risk amount or risk tolerance. It's the same thing. Stop loss, risk amount, risk tolerance. So you divide your risk amount by the stop loss percentage on your trading view or on the signal being given to you crypto pastor or any other person. So someone should please calculate this for us. 3 divided by 4.69. Then you put your percentage symbol after writing it on the calculator. Or simply put, you go over to your calculator. Any one of you go over to your calculator, type 3, put the division symbol, then type 4.69, then you add the percentage symbol. Whatever answer I give you, then come back to comment section and type it. Any one of you can do it. I just have challenge with my calculator. It's not working out well, like straight ahead to get the value or the answer. So any one of you, please, real quick, so I can move over to how to set in the trade on Bybit, then call it a day. 3 divided by 4.69 percentage. Anyone else? Anyone? Sorry. Anyone at all? Just divide 3 because we want to lose $3 on this trade. So you divide 3 by the stop loss percentage. You divide the amount you want to lose by the stop loss percentage given to you on your trading view or on the signal. Whatever amount you want to risk, just divide it by stop loss uh, percentage, and you get your order value that you place on Bybit. Then you fix your entry, your stop loss, and your take profit. Then you now see that if you reach your stop loss, it is that $3 you lose. Sometimes it might show you 2.9 or 2.8, 2.9795. If you approximate it, it will give you that $3 exactly. So at stop loss, you will lose that $3. Then based on the risk reward ratio, like for example now this one is a 1:3. You are seeing 3.22. I told you in the earlier on that the first digit is the standard one. This is 3.22, but on a standard risk reward ratio, this is 3:1. That means whatever amount you are risking on this trade, you'll be making uh, 3 times of it back at take profit. So this is 3:1. Even if it's 3 ratio, yeah, even if it's 3 point something, just know that. But if it is above 5, like for example, this is 3.22. If it is showing 3.5 and above, and then you know that okay, you are getting closer to 4, 1:4. But still, if that first digit is still showing you 3, it's 1:3. It's 1:3. If for example this one is showing 4.22, then you say 1:4. If it's showing 2.22 or 2 point whatever, is 1:2. But on this one we have 3.22. This is 1:3. So you will make 3 times whatever amount you are risking on this trade. So you divide 3 by that 4.69 percentage. I think someone has done it for us. 63.965. Okay. Now you are correct. You are correct. So what you do is that um you will pick the value you get from a calculator before the decimal point. The value you get before the decimal point is what you work with. So in this scenario now, in this example, you are working with 63. Or for example, if you want to like use the one like personally, I don't use the one after the decimal point. So if I'm to take this trade alone now, I'll just use 63. But some people will just approximate it to, like, since the number before the decimal point is above 5, mathematically you approximate then give you 64. Or some persons will use 63.96. But me, I don't like using the ones after the decimal point, so I just write 63. So this is how you get your order value, because on the Bybit, once you want to place your signal, the first box I think is your entry price, that is your entry. The second box is order value. Now that order value, what they are asking for is what you get after dividing your risk amount by that stop loss percentage on your trading view. So Whatever answer you get on your calculator, that is your order value. So on this particular example of having 4.69 percentage as our stop loss percentage, 63 is our order value. So we'll go over to Bybit now to take the signal. So you change the coin. So on your phone, you look on the left hand side, you might see BTC, you might see Solana or Ethereum. Just click on it, you change it to the coin that you just analyzed or the one being sent to you on the signal. So on this particular example now, it is Boom USDT. Now on your mobile phone, you will see some they will write uh, perpetual, and some there you might see spot. Make sure you are seeing perpetual below it, so that you no go and choose the one for spot and taking your trade with it. After searching for it, make sure below it you are seeing perpetual below it. On your mobile phone, the perpetual will be below it, but on your laptop it will be above. Make sure you select the one perpetual. So for this particular one, we are selecting Boom USDT perpetual. You change it to the coin you analyze or the one being sent to you on the signal. Then you move over to fixing your signals. Now, once you come to this particular place, make sure that this one. Make sure that this place is showing isolated. Make sure it's showing isolated. If it's on cross, change it to isolated. If it's on portfolio, change it to isolated. Because once you're just starting out, you get acquainted with the isolated margin first before you move over to after gaining mastery of the isolated and gaining full knowledge and some other ideas, then you move over to cross. For this example, you stick to as you are just starting out, you stick to isolated. Even if you're a pro trader, it doesn't like person like me. I've been using isolated for close to for a year plus now. So once you come over to the Bybit, you want to place in your signal. Make sure number one is on isolated, number two is on limit, not market. Your market means you want to enter at the current price. The limit means you are waiting for you want price to come to a particular area. Like in this example now, you want price to come to this particular price area before coming down to our take profits. So the first price now is your entry. So you look at your signal or your trading view. The entry price is the one in gray or black color. The stop loss price is the one in black. The take profit is the one in green. I repeat, the one in gray or black color is the entry price. The one in red is your stop loss. Then the one in green is your take profits. So real quick, you will see price. That means their entry price. Now entry price is 0.001065, 0.001065. Now the first box is your entry. The second box now is your order value. That is the answer you get from your calculator after dividing the amount you want to reach by your stop loss percentage from signal or from your trading view, and we got 63. We got 63. So um next thing you have to do is on your phone or laptop, you still the same thing. You activate the take profit and stop loss box. You activate it. Now you fix in the remaining two digits. The first box is take profit. You go over to your trading view or the signal. Fixing your take profit 0.000904, 0.000904 take profit. Then stop loss. Stop loss is 0.001115, 0.00 0.001115, 0.001115. So you see now, are we still following from the area we calculated our other value, like that is dividing our risk amount by the stop loss percentage up to this moment? Have we been following? Can we continue to the can we continue with the explanation, the one in Bybit, how to take the signal? Are we all understanding? The best time frame to use as a day trader, or even if you are just starting out, is higher and medium time frames. Like you use the higher time frame for daily directional bias, like the 1 day time frame, to know what has been going on the market, which trend is currently in control, either the uptrend or the downtrend. Then you use your 4 hours or 1 hour to set your key zones. You use your 4 hours to set and mark out your key zones, your trading plan, your trading setup that you always should see before taking trades. Then you can use that same 4 hours as your entry, or you can use 1 hour, whichever time frame that lets you that gives you that what do you call it? That gives you that valid zone for entry. Like someone like me now, I might use 4 hours, I might use 1 hour, but most of the time, 80% of the time, my entry is always on the 4 hours. So I'll just you check the 1 day time frame to see directional bias, whether uptrend or downtrend. Then you mark out my key levels and my um, other criteria that I need to see before I take trades on the 4 hours. And then use that same 4 hours as entry. And sometimes, not all the time, 1 hour for entry. So you said after stop loss, which one did you enter again? No, everything I've been typing since is from TradingView. It's from TradingView. This one now, after setting your isolated margin, setting your limit, the next thing you have to type in is uh the price, limit price. This is your entry price from the signal. You check very well. The entry price 0.001065. This is it here. 0.001065. Then the value. This is the value that we calculated together by dividing that $3 I want to lose based on this example by our stop loss percentage, which is 4.69 percentage. You divide the risk amount by stop loss percentage, it will give you your other value. Whatever answer it gives you on your calculator, place it here. It might be 1 rand something, might be 50, might be 20 something, might be whatever. Just place it here. Then activate the take profit and stop loss percentage. Sorry, take profit and stop loss box. You toggle it on. You toggle it on. Then next thing you have to do here now is to fix in the first box is take profit. The second box is stop loss. So take profit, you fix in your take profit now. Take profit is 0.00000904, 0.000904. The next box is take a stop loss in case it doesn't go our way and it reverses to the upside, break above our resistance. Stop loss 0.001115, 0.001115. Now this is it. If you look closer now, you see now our risk reward ratio now is 1:3. That means whatever amount you are risking on this trade, we have to make 3 times of it back and take profit. So we are risking $3. Now if you multiply 3 by 3 to give you 9, because we are risking $3 on the trade. If you multiply it by your risk reward ratio, which is 3. 3 multiplied by 3 will give you 9. If I'm to risk $5 on this trade, it will be showing 15 there because 5 multiplied by 3 will give 15. If you are risking $10 on the trade, 10 multiplied by 3 will give you 30. So on this particular example, we are risking 3 to make times 3 of that 3, which is 3 times 3 will give you 9, which is what you are seeing here. This is it. Expected profit 9.5239, which is $9. And the point, the percentage as your ROI, return on investment, it will give you 302%. Now, the stop loss area is the one you focus on. You focus 30% on the profit, 70% on the stop loss. Now, expected loss 2.9577, ROI 93. You will lose 93% of whatever you are entering the trade with. Now, we are entering this trade. You look at your mobile phone or your laptop, you see cost, you see cost and quantity. You look at the cost. Cost means you are entering the trade with that particular, the amount you are entering the trade actually is your cost. Now, what this simply means is that on this particular trade now, we are entering with $3, but it looks as if we are entering with $63. This is to give us our position size. We are not entering the trade with $63 exactly. It's because of the leverage, which is 20x. Now we are going to come over to leverage as soon as I'm done with this explanation, to make sure that our liquidation price is higher, is in where it's supposed to be. Now, based on this 20x leverage, if you are to use this 20x leverage now, is because this 63 you are seeing here, it's as if we are, because leverage means borrowing money to enter trade. Now, if you use 20x leverage, that means you are borrowing $63 to enter this trade to give you a position size, whereas you are just entering with $3. Because if you multiply this 3 by this 20, 3 multiplied by 20 will give you 60. But based on those normal, those other ones that are behind it, it will give you 63 point something. So that's just it. Now, for you to know that you are on a safer side, what you do is you click on short, you click on short, and on a short trade, you make sure that your liquidation is higher than your stop loss. You make sure that your liquidation is higher. Now you have to focus on two things here, just two things before clicking on the confirm button. Your estimated liquidation price, which is this one in yellow color, and your stop loss, which is this one in red color. So you check. Now you are taking a sell short, that is a short position. Your liquidation, that is this yellow color one, should be higher than this red one. If you are taking a long, this red one should be higher than this yellow one. But since it's a short position, this yellow one, the digit in yellow should be higher than this. So if you check very well, this one is lesser than this. So what do you do? It's very simple. Just go and reduce your leverage, adjust it backwards, use, go back to 15 and check. Okay, 0.001127 and stop loss 0.001115. Now, on this particular trade now, you are good to go with this 15x leverage because our liquidation is higher than our stop loss. Like our stop loss is lower than our liquidation. Then that means you are good to go. Once you keep adjusting your leverage to the backwards, and you get to a particular selection, and you see that your liquidation is above your stop loss, because on a short position your stop loss should be below it. Now if you see this one now, 0.001115 is lesser than this, that means you are good to go to click on the confirm button and wait for the trade to get to your point of interest. Then you take get your point of interest. Then if it goes your way, you make money. So with that being said, do you understand? Yes, you can use $10, Mr. Carlo. You can use $10 to trade. You can use $10 to trade uh, BTC, but it depends on the stop loss percentage. If the stop loss percentage is too high, it won't be able to open up a position sizing for that $10 account. So most times that you'll be able to use $10 to trade Bitcoin is because if you are scalping, yes, if you are scalping, you can mostly use $10 to trade Bitcoin because the higher the price of the coin, like how will I even put it now? Um, if the price of the coin is very much higher, it kind of require much of capital to give you a good position sizing. Yes, that's why most times people that do trade Bitcoin do have a good amount of capital to trade. So yes, you can use $10. I've used $10 to open up a Bitcoin trade position before, and it went through. And my liquidation was okay. My stop loss was okay. My stop loss was far from my liquidation and all that. So yes, you can. This one we'll be talking about this one in our next class. Yes, we'll be talking about this year and some other things we didn't touch in this class. So with what I've said so far, from the trading view to the Bybit and explanations on both sides, are we good to go? Do we understand this so far now? Are we good to go? Yes, yes, yes. Whatever I've been saying so far is is being recorded. Is being recorded. So even if, for example, maybe you have a friend, or you have a loved one, or a beloved that you would like him or her to listen and watch what has been said so far, you can, because the recorded version will be dropped. Yes, it will be dropped in the link will be dropped in the group, and you can go over it at your leisure time or send it to someone that you know will benefit from this. So yes, it's been recorded, so you can get back to it because the link will be shared in the group. So yes, you can. Thank you for that question. A little more. Okay, okay, okay. Let me go right. Let me go right again. So we wanted to risk $3 on this trade, and for that $3, we divided that $3 by our stop loss percentage from TradingView, which is 4.69 percentage. Now that 4.69 percentage, we divided our risk amount for this example. I used $3 of the trade, but that's the 5% of my capital. 5% of $6 is $3 per trade. So 3 divided by um, that stop loss percentage, which is 4.69, will give you 63 point whatever whatever. But me personally, I like sticking to the one before the decimal point. So which is 63. This first box here is for you to fill in your entry price from the signal. Even on a mobile phone, you see the same thing. The first box is entry. The second one is the other value. That's the answer you get from a calculator. You fix in there. Then you activate your TPSL, that is take profit stop loss box. You activate it. It will bring two boxes for you. The first box is for you to fix in your take profit from the chart or from the signal. The second box is stop loss, fixing the digit from the chart or from the signal being given to you. Now you check expected profit, that is the amount you are risking multiplied by the risk reward ratio. It will show plus the percentage, that's the ROI, return on investment. Then the stop loss, now expected loss. Now for this trade, we are going to lose $3, but if you check very well, 2.95, if you approximate 2.95, it will give you 3, which is 3 USDT or $3 exactly that we're going to lose. Now we are entering this trade with $4 because we have reduced our leverage to a very um, considerable amount of leverage, 15x, because 15x is the highest we are to use based on risk management. Anything higher than 15x leverage will make our stop loss to be the same or closer to our liquidation, and we don't want that. So you adjust it backwards. Once you get to the particular level that you see that okay, your liquidation is now lesser. If you are taking a short and you keep on reducing your level and you see that your stop loss is now lesser than your liquidation, then you stop at that leverage and use it for that trade. Now, on this particular example, after fixing your entry, your stop loss and take profit, and you see that you have to look that particular amount exactly, you click on the buy or sell. For this example, we are clicking on the short because we are taking a short trade. Now, once a confirmation window pops up, you have to focus on two things here, two digits, the one in yellow color, the one in red color. So the one in yellow color is your liquidation. Even on a long trade, the one in yellow color is your liquidation, the one in red is the stop loss you set. Now, for you to confirm that okay, this 15x leverage we selected is good for us to enter this trade, is if you check now that your stop loss is lesser, that is the one in red, your stop loss is lesser than your liquidation price, that is this yellow one. Once you check that, because on a sell or short position trade, you are taking a short position trade, your stop loss should be lesser than your liquidation. Simply put, the one in red color should be lesser than the one in yellow color. Then once you see that is correct, like as it should be, this one, the one in red should be lesser than the one in yellow. If you are taking a short, then you place your confirm button and you take the trade. The opposite the opposite is for if you want to long a coin. If you want to long a coin, once you place in your credential from the signal you have been given off from Bybit, from TradingView, sorry. You click on long. For example, you click on long. In a long in a long position, make sure that the one in red is higher than the one in yellow. In a long position trade, make sure that your stop loss is higher than your liquidation. But on a short position trade, make sure that your stop loss is lesser than your liquidation price. Then you click on the confirm button, then you take the trade. So that's that about that.